Welcome to my channel and thanks for watching this video. As we have ended with one more, I would say, brutal week, and the stock market just thrashed like we have said in the past. Let us reanalyze the market again. So welcome all to another episode of USA Weekly Market Report. If you haven't yet gone through my series for USA Weekly Market Report, please go and recheck or check my videos. And I have shared my views, how's the market or basically the Wall Street is looking and what's going to happen. And you have a script in front of us, and as of now, market is just playing the same kind of moves as far as the big trend is concerned. So with that note, let's reanalyze or let's recap what has happened in this week and what will probably happen in the week forward. Now, as you can see the headlines, you do not see anything new. Okay, as far as I am concerned, you do not see anything new. What you can see here right now is basically a change in price, and it looks like the ongoing conflict is here to stay. We don't know the nitty-gritties of that. We are not here to talk about geopolitics. Our focus must be on the stock market, but obviously the geopolitical tension happening in such a time, and the problem between those two countries are so big, and they are when those countries are the global exporters, then everybody will suffer, and everybody is indeed suffering, because you can see inflation has gone up, there is food scarcity, there is energy scarcity, and things are going haywire. Apart from that, let us find out. I don't want to go into who is going bankrupt or anything like that. We simply focus on stock market, and then you have, let us find out. And yes, everybody knows that thing, that now Elon Musk have officially purchased Twitter, so he is now going to manage the tweets across the world. So a big thing that has happened. Hopefully he is going to be somebody who is not aligned with this person or that person, otherwise it will change the entire narrative. And then you have Amazon shares fall 14% for the worst day since 2006. I mean, understand one thing, you are talking about stock and not the business. But the problem is, or the kind of narration you will get, or the kind of idea that a reader can get is, now the business is not working. It's nothing like that. Shares do fall. It does not matter how big or how great the company is, because share price is simply driven by buying and selling. Okay, it is nothing to deal with the business until and unless things, there are some terms and conditions always apply. Here we are only talking about a 14% share price fall, and if you are somebody who are here to find the opportunity, here is the opportunity. Find your best buy at best price, right? Apart from that, Eurozone inflation hits record high for the sixth month in a row. Obviously, the energy crisis is the prime as far as the Eurozone is concerned, and until and unless this geopolitical conflict cools off, you will see the similar kind of things happening, specifically in Eurozone, because they are heavily dependent on that. Okay, and if you are sitting on a chair and you try to break the legs, or you try to break the legs, and hopefully out of four you have already broken one of those legs, now you are facing the music. Okay, so these kind of things actually hurts the individual himself, or in this case the country or the entire Eurozone itself. Apart from that, let's quickly go to the market close and let us see what has happened. and things are not happened quite good because the cumulative impact of NASDAQ and Dow Jones is huge, and S&P fallen by more than 3.6%. NASDAQ is majorly affected, 4.17%. And I have said this thing, I think 1.5 or 2 months back, that the best buy zone for NASDAQ is in between 9 and 10,000, and Dow Jones has finally making the move. So we have way to go on the downside, that's for sure. Apart from that, VIX has increased substantially. So right now it has closed at 33. It means volatility or huge volatility is back into the market. And then you have oil, which is trading at 104. You have gold, and this is something which is temporary, which I definitely see is temporary, and I will explain you the reason when I'll explain the chart. And then the US 10-year bond yield is again back because it has recently touched nearly 3%, and then it falls down, and then it has started rising again. Apart from that, you have natural gas. I have been very bullish on this since it was trading near $3 or $4. Right now it is 7.24. You can go and check out my previous videos on natural gas. I have been very bullish, and because all the eurozone, as I told you, they are the biggest importer of natural gas from Russia, and obviously the inflation and everything tells the exact story what's actually happening. Bond yields are rising across the period, and you have dollar index, which is actually looking higher, and create tremor into the stock market. And people tend to forget time after time what's happening as far as the important components are concerned. And when dollar index started moving, you have to listen to the move. So what we are going to do right now is, let's jump back into the chart, and the first chart that we are going to analyze will definitely be the US dollar index or DXY. So this is the chart since 2015, and we are in 2022. Right now you can see there is a specific range in between which dollar index have been moving. So on the downside you have 88 and 89.7, and on the upside you have 103.4 and hopefully 104. Let me just zoom this a bit so that you can see. Here we are, 103.9, and then you have 102.98 or 103, and the high dollar index made was 103.93, nearly 104. So it is trading at the highest end of the range. Now the trick is everything is in, now the ball is at the US central bank's court. Their decision, the next central bank meet or the next Fed meet, will decide the move of the dollar index. Right now the impressions that they have given here is, or to the market is, we are more concerned about the inflation. Forget about the economy, forget about the recession. What we are most concerned about is the inflation, and that's why you have seen gold is falling down, interest rate is moving higher, dollar index is trading very near to a breakout level. And let me tell you, once it moves beyond $104, the next big target will be $120. So if that happens, we are here for a very sharp crack in the stock market. Okay, so it all depends upon how the central bank is going to make its move. Understand this thing very seriously. Okay, now it's up to them. They have a hard decision to make, because making statements in the stock market has already created lots and lots of volatility if you are looking at the current market action, now if they really decide to uh, make the economy better and try to tackle the inflation, that's a good thing. That's a good thing. But the price that the stock market or the stock market investors, and not only the stock market investors but the retail people, have to, now it will impact the real economy as well as the money market as well as the stock market. So everything will get impacted by this move. Okay, so things are about to change, and it will completely depend upon how the central bank is going to react. So things are a bit tricky, so do watch US dollars, and you just pray that it's not going to move. You just pray that it remains inside the consolidation, and this is the high that US dollar index has made, and it will again move back to 89 or 88. Okay, that should be the most ideal scenario for the market. But if it does not, then you just calculate the move from the lower end to the higher end. It is 16%. Okay, if I exclude the top, it is still 16%, and a 16% move from the breakout, as you can see, will give you your next target, which is 120. So this will definitely create panic, big panic into the stock market. Okay, now the next thing is the NASDAQ. Okay, because it is highly volatile, it has literally cracked. So now we are looking at the weekly chart for NASDAQ, because all the levels as far as the daily charts is concerned, or all the moving averages have broken down, and the next moving average as far as the weekly chart is concerned is your 200-day simple moving average, or the red line, and it is at or near 10,660. So this is the level that we are going to look at, and the big support we have here is at 9,938, and I have been saying this when it was trading near 16,000. Okay, that things are not looking good. But as I told you, as I explained you the scenario for dollar index, if things turn bad, then let's go to the monthly chart. Let's definitely go to the monthly chart, because in case, let's say, I'm just talking about the scenarios, in case things turns bad, then okay, then here we are. And here you can see the levels. So in case of big disappointment, you will see the low of 7,900 and 8,000 as well. So you better watch these levels, and because Dow Jones is the high beta index, and most of the growth stock is, beg your pardon, NASDAQ is the high beta index, and most of the growth stocks is included in NASDAQ. Obviously, it will get impacted the most. Now the next one is going to be the Dow Jones. Now fresh move has started. As you can see, that Dow Jones has finally broken down. It's being trading here and there, but when inflation started increasing and you are focusing on interest rate, a substantial amount of rise in interest rate you are thinking about, and your dollar index is going up. So at the end of the day, in a simple word, the cost of capital will go up, and only companies, those who are actually earning cash, they are going to get saved. I mean, I'm talking in terms of business, not in terms of stock prices. Every stock, I mean, it does not matter whether you are a good company or bad company. Now every company will fall. The problem is those who are only talking about growth and they do not have any substantial improvement in their financial books, they are going to get hammered like anything. they are definitely going to face the music or will face the wrath of the market. And as far as the Dow Jones is concerned, the levels that we are going to look at, okay, is in between 20. So there are two specific levels, 28,960 and the big support of 27,000, I think 700 or 800. So you are here for a big bad move which is yet to be seen. So be very specific about what you are choosing, and as I've told you, I'll tell you again that things or the ball is in the court of US Fed. Their move or their decisions will definitely have a huge impact this time as far as the market is concerned, and things are getting a bit tricky. Now talking about the gold, because I have talked about the gold. So gold, as I told you, the Fed will definitely decide the move, because if the Fed decided to tackle inflation, let me tell you, 1919 is going to be the high, and next time it will definitely going to make a move on the downside and retest the lower end of the range. That will definitely happen. Okay, so you have to decide what you are doing, what you want to do. So as a summary, US Fed decide that it will go slow as far as their policy, as far as their stance is concerned. Then you will see an uptrend in gold. Otherwise, you will see a downtrend in gold, and that will happen in the stock market as well. Okay, because right now, when you are, as far as the Wall Street or US economy is concerned, the interest rate is extremely low. Now from 0.25% to 3% is going to be a huge jump, and there will be defaults in that case. So let us see, things are getting tricky, things are getting much more interesting day after day. So we have to see how the stock market and how the central bank are going to plan their situation. So stay alert, stay careful, and I'll tell you one thing, at the end of the day, you will definitely see the light towards the end of the tunnel. So if you know something is good, try to find out the best level to buy, and you will definitely not regret from it. So this is the end of the video. Thanks for watching.